Bond market. We are witnessing significant developments in the bond market, and there are interesting developments on the global bond market, global sukuk market, a GCC bond market, GCC sovereign CDs, and they are also now in the market now, and the syndication, of course. There are quite a few developments. Let's look at the big picture, the global bond market. If you look at between 2020 to 2021, international bond market, the bond issuance exceeded last year 5.67 trillion in spite of COVID year. 5.67 trillion. Now, as it stands in October, it is nearly 5.1 trillion. So definitely we have November and December, and I'm sure this will exceed the last year number. When it comes to US 10-year bond yield, that stands at 1.34. Now, you can split into conventional bond and sukuk, Islamic sukuk. In global term, global sukuk exceeded 67 billion in 2020 and exceeded 711 billion in 2021 as it stands. 71 billion, I should say. The major sukuk issued includes Oman sovereign sukuk 1.75, Aramco 6 billion, Malaysia 1.3 billion, Indonesia 2.25 billion, Hussein Warlik, that is around 2.5 billion again, ISDB Trust Services 200 billion, Dua Capital 1 billion, UK sovereign sukuk nearly 686 million, Federal Land Development Authority, they issued around nearing 500 million, to be precise 487 million. Dana Info National, again, that is issued to the tune of nearly 544 million. Lembaga Perumahan, that is another $945 million. So these are the global sukuk market. When it comes to Gulf bond market, most important thing is where we operate from, the Gulf space. Let's look at the GCC sukuk. Last year, over 35 billion. Now, already reached in the first 10 months, 35 billion. Who has issued? Saudi Arabia, global, 6 billion. Alali United, 0.6 billion. Sharjah Sukuk, 0.75. Dukhan, again, Tier 1 they issued, as you know, that's around 0.5 billion. Emmar, $500 million again. Kuwait Finance House, Tier 1, 0.75 billion. Dubai Islamic Bank Sukuk, 1 billion. Oman Sovereign Sukuk, 1.75 billion. Riyadh Bank, nearly 930 million. NCB, 1.25 billion. FAB, First Abu Dhabi Bank Sukuk, $500 million again. And Saudi Real Estate Refinance, that's over $1 billion. The Gulf bond, if you look at, not necessarily confined to sukuk alone, issued last year was over 90 billion. And the first 10 months already is 76 billion. Major bond issuance includes Qatar Petroleum, 12.5 billion. Qatar Petroleum saw participation from 500 investors, and demand is speaking about 40 billion US dollars. Ooredoo, 1 billion. Doha Bank, 500 million. Bank Muscat, 500 million. Alali Bank Qatar, another 500 million. Alali Bank Qatar additional tier 1 also they issued 300 million. CBQ additional tier 1 bonds 500 million. NBK National Bank of Kuwait, additional Tier 1 bond, 700 million, and various bonds issued by QNB again. They are also on the fray. It includes sovereign bonds. Saudi government, nearly 5 billion. Oman government, 3.25 billion. Bahrain government, 2 billion. Sharjah government, 1.25 billion. Now, if you look at the big picture, the trend in the Gulf bond market, the banks and sovereign continue to tap the bond market at a brisk pace in 2021 as they try to take advantage of the lowest interest rate amid prospects of economic recovery. The impact of COVID-19 on earnings have spurred banks to raise capital through bonds to strengthen their balance sheets. Banks also needed to issue new bonds to pay the ones maturing this year. There have also been additional Tier 1 bond issuance from GCC banks. These are perpetual bonds that could be called after a specified period by issuing back. You have a right to renew it unless you want to call back. So the buyer of the bond cannot enforce it. Even though banks have option of continuing interest payments indefinitely, they generally exercise the call option at the first available callable date to show their financial strength. Now, when it comes to CDs, Qatar's CD holding good, 43 basis points. Saudi is around 51 basis points. Dubai is around 92 basis points. Abu Dhabi again 43 basis points. Bahrain is around 300 basis points. Syndication markets, loans has surged. If you look at 2021, 95.6 billion. Last year was 62 billion. Now people are coming back to track now in terms of syndication. That's the big picture as far as the bond market is concerned. Still very active, more and more fixed income. The prices are going to be under stress because of the ongoing interest rate scene. So there has to be more turnover in those spaces. We have to be watchful how the interest rates will change so that the bond market price also will change. The profitability will change even though the interest coupon will go up. So plenty of challenges in the bond market, but at the same time it's secured, fixed income investments. So global institutions or ultra-net individuals are all going for investments in the bond space.